Yeah, I think the better way to put gold hitting record highs is the dollar's hitting record lows. That's the better way to look at it. And actually, it is extremely important to look at what's going on in that light. Foreigners have been getting out of dollars. That's the whole point. Now, to some extent, they've been moving into sort of portfolio shifts have moved into, say, Eurozone bonds, that sort of thing. But basically, they've just been trying to get out of the dollar. And so that's why gold shot up. You could argue that gold has risen and all the rest of it, but actually the more accurate definition is the dollar is going down. And the reason I say that is because of the buyers who have been buying gold. I mean, basically they are central banks, sovereign wealth funds perhaps, who basically just want to get the hell out of the dollar. And that's what's been happening. So,
as worries about debt, inflation, and central bank credibility continue to dominate headlines, this week has been crucial for global markets. Long seen as safe havens during uncertain times, gold and silver are once again in the spotlight. Renewed concerns over a worldwide currency crisis propelled gold to an intraday high of $3,480 an ounce. Silver did the same, rising by almost 9% in just 2 days. Goldmoney's head of research, Alasdair Macleod, claims that these price fluctuations are only the outward manifestations of a much more profound structural change. He contends that fiat currency trust is fast declining and that we are in the early phases of a global monetary reset. Macleod points out that by increasing the amount of gold in their reserves, central banks, especially those in Asia and the global south, are quickening their de-dollarization efforts. Gold is becoming the cornerstone of a new monetary order in this context, not just an asset. Macleod thinks that recent volatility is an indication of gold's actual revaluation, rather than merely a response to market noise, even though it may frighten traders. Please remember to like this video, subscribe to the channel, and enable post notifications before we delve further. Thank you, and enjoy the video.
Gold record highs recently, what you've been watching and what you've been observing along that way, anything that we should be looking for going forward?
Yeah, I think the better way to put gold hitting record highs is the dollar's hitting record lows. That's the better way to look at it. And actually, it is extremely important to look at what's going on in that light. Foreigners have been getting out of dollars. That's the whole point. Now, to some extent, they've been moving into sort of portfolio shifts have moved into, say, Eurozone bonds, that sort of thing. But basically, they've just been trying to get out of the dollar. And so that's why gold shot up. It's really, I mean, obviously there's, you could argue that gold has risen and all the rest of it, but actually the more accurate definition is the dollar is going down. And the reason I say that is because of the buyers who have been buying gold. I mean, basically they are central banks, sovereign wealth funds perhaps, who basically just want to get the hell out of the dollar. And that's what's been happening. So, I mean, the problem really is that, the quantity of dollars in circulation, the amount of credit, dollar credit, is absolutely enormous. And it by far outweighs the amount of available gold. So you can understand that the dollar priced in gold is more volatile than, say, the dollar priced in other currencies. And of course, when the dollar goes down, it is the king rat of fiat currencies, so it takes the other currencies with them. So, I mean, the Asian central banks in particular don't really have very much appetite for any of our fiat currencies. So you can see why that any dip in gold, anything that comes on offer, they just basically snap up. And that's what's been happening. And the liquidity in the system, of course, has moved over to COMEX from London, Switzerland, and elsewhere. That's where any liquidity is now. But we don't know what's happened to that liquidity. I mean, the stands for delivery are basically accelerated. So as fast as it's coming in through one door, it's going out through the other. Or, I mean, there's a pause, if you like, between them coming in and going out. But you can see that the stands for delivery are enormous. And I suspect that when we see the next stand for delivery, the next contract maturity, and particularly, I think it's the May contract, which is the active one. So end of this month, you could see some huge figures going through. I mean, that's going to be worth watching. Well, the only clue we have is the US Treasury's, what are they called, international capital, the tick figures that they produce. So that's always, sort of looking back a little bit, but not terribly far. And if you add up all the components, foreign ownership of financial assets, and we're talking about US Treasuries, we're talking about short-term debt, including bank deposits, and we're also talking about corporate bonds, and we're also talking about equities. Total all that up, on the most recent tick figures we have, we're looking at about $39 trillion. Now, obviously, there is a bit of a rescue operation going on because, the Treasury understands this. They produce the figures, after all. They can see. I mean, they're not stupid. It's as many commentators seem to think. They can see exactly what's going on. They know the fragility of the situation, which is why Scott Bessent, in particular, has been backtracking on Trump's policies. And I think that Scott Bessent has made it absolutely clear to Trump two things. First of all, his tariff policies are going to destroy the economy. And what it'll do is it'll just everybody would be getting the hell out of the dollar.
President Trump attempted to reassure financial markets by asserting that trade negotiations with China were making headway. However, that hope was short-lived, reminding everyone that the headlines frequently reflect political posturing more than actual talks. Chinese officials promptly denied any breakthroughs. The back and forth has only increased market turbulence and sparked fresh worries. According to Alasdair Macleod, there are serious problems with Trump's economic strategy. His view that tariffs may take the place of income taxes is among the most contentious. It is a holdover from pre-World War I thinking. However, such a paradigm is not viable in today's highly globalized and debt-driven economy. Tax revenues are predicted to decline when the U.S. economy begins to deteriorate, further increasing the federal budget deficit. The government's fiscal situation appears increasingly precarious as spending continues to rise. Trump has simultaneously put more pressure on the Federal Reserve. He chastised Fed Chair Jerome Powell once more, calling for quick interest rate cuts to prevent a possible slowdown in the economy. Don't forget to subscribe and hit the bell icon to stay updated on our latest videos. We'd love to hear your thoughts in the comments. Now let's dive back into the interview.
And I think the other thing that he's told Trump is, look, you talking about sacking Jay Powell is the worst thing you could do. You are destabilizing the whole of the financial system. Stop it. I doubt if he's been much less blunt than that. The result is that markets have stabilized. We've seen the price of gold fall, or more correctly, the dollar rally measured in gold. $270 change, really. But the thing that accentuates it is an economy going into recession. Because the tax base, in order to support a higher level of debt, is disintegrating from underneath the debt. And that is, if you like, the classic definition of a debt trap. Everybody knows it. I mean, all the central banks around Asia, they've got departments that look at these things. They know it. And I think, in the past, there has been a fear, if you like, of upsetting the apple cart, of being first to cry wolf, if you like. And I think that that fear has rescinded very, very significantly. I just get the feeling, the
fear of being the first one to cry wolf, you're saying, has rescinded.
Yeah, well, yeah. The first ones to cry wolf about the real state of affairs with the dollar.
Gotcha.
Because nobody actually wants to topple the whole thing over. Nobody wanted to point out that the guy was naked until some innocent child said, "Oi, the emperor hasn't got any clothes." And that broke the dam. And I think it's, as an analogy, it's not too far away, I think. Well, what convinces me of that, quite simply, is the destruction that he has wrought on markets by, as I said earlier, every time he talks about China, he seems to he says, I'm going to make it 245% tariffs. Hold on, this is a man who actually doesn't understand what, his responsibilities. And not only that, but you have all these executive orders coming out of the White House, which, has he really got the power to do this? You sort of think this is not actually, basically he's doing things that Congress should be doing. I mean, if Congress passed these policies, which I would very much doubt a lot of his policies, that's actually their responsibility, not the president's. He's weaseling around the law to basically take total dictatorship over American policy. And his latest example of this, of course, is on interest rates. He's trying to take it away from the Fed. I mean, this is just so dangerous. And, I think that he has been sat on because quite clearly he's quietened down. And I think he's just been told, look, shut up. When you've now got to ask yourself the question, having sort of embarked on this fairyland idea that he could replace income tax with tariffs and so on and so forth, like they did before the First World War or whatever, what's going to happen now? That's obviously not going to happen. Whether there is going to be any increased revenue from tariffs, we'll have to see. But there's a huge question mark over that. What's going to happen now that we've got he's really given a kick into a recession? He's just kicked the economy downstairs. What's going to happen to the budget deficit? It's going to rise, isn't it? Can he cut taxes? No. If he tries to cut taxes, he'll get punished. It's simple as that.
Alasdair Macleod presents a grim outlook on the potential future of the American economy. He cautions that we are now approaching a typical debt trap, in which the government's debt is increasing while the economy is contracting and the tax base is getting smaller. To put it simply, the nation is accruing greater debt at a time when its capacity to pay it back is eroding. That's what makes this particular time particularly risky. Asia's central banks recognize the warning indicators. Additionally, Macleod is a harsh critic of the economic policies of former President Trump. He contends that Trump has a basic misunderstanding of how the modern financial system operates, particularly his notion that tariffs may take the place of income taxes, a notion borrowed from the pre-World War I era. It just doesn't make sense in our contemporary, multinational, debt-driven economy. Additionally, Trump's strong use of executive orders and tariffs may have sent the economy closer to recession rather than strengthening it. Without a clear plan to address it, the budget imbalance is likely to grow even larger as government expenditure keeps rising and revenues decline. Macleod claims that Trump's attempt to circumvent the established checks and balances is more concerning. He charges that Trump has effectively sidelined democratic processes by using executive orders to advance programs that ordinarily need congressional approval. Another indication of this risky overreach is his recent attacks on the Federal Reserve, which even included attempts to sway interest rate decisions. And as always, happy investing.